Well, for his take on where silver's headed, we're with the head of research and investment strategy for ETF Securities, Nicholas Brooks. Thank you very much indeed for coming to speak to us. So really, if we look at precious metals as a whole, silver prices seem to be taking their cue from gold, rising to a near 30-year high. Does silver still have further to go?
Well, let's put it this way. Silver and gold tend to have a very tight relationship over time. The gold price has been hitting multiple new highs recently. A lot of people have been focusing on gold, but we're seeing silver now catching up very aggressively. And historically, you'll find that silver is more volatile than gold. So often when gold is rising, silver rises more. And that's exactly what's happening right now.
And why is the price of silver rising? Tell us more about what's driving the demand for silver.
I think the key force driving silver today is very similar to what's driving gold, and that has to do with concerns about the outlook for major developed economy currencies, in particular the U.S. dollar. There's a lot of focus on whether the U.S. is going to be moving back towards quantitative easing later this year. That leads to concerns about the outlook for the U.S. dollar. But at the same time, we're seeing the yen being intervened by the Bank of Japan in an unsterilized manner. We know that the Bank of England is open to new quantitative easing. And, of course, we have the problems in Europe. So it's not just the U.S. dollar. It's a problem with all major currencies, and therefore a lot of investors are looking at gold and, in a secondary way, silver as another store of value and another place, hard asset, to put their capital.
So with that in mind, if we do see central banks decide to pump more money into the economy, for example, in the U.S., a great deal of speculation about another round of QE, how is that going to affect precious metal prices?
Well, I think in the medium to long term, that means they're likely to continue to rise. Obviously, markets price things in advance, and I think a lot of an expectation of easing is going into the gold and silver price right now. But again, if there's an expectation that this is a medium to long-term policy of keeping very low real interest rates and continuing to ease on the quantitative side, then I think gold and silver prices are likely to move a lot higher from where they are today.
Given the volatility that you speak about, how sustainable are these gains?
Well, again, if you look at gold on a historic basis, the volatility is actually quite low, lower than most developed economy markets. Silver is more volatile than gold. So, again, if you look on a medium to long-term basis, I think you're going to find that gold is a more sustainable rise, because you'll find that silver, which does have very large industrial uses, is more tied to the business cycle. So my own view is, if we were to see disappointing economic growth later this year or next year, silver is more vulnerable than gold, because ultimately it does trade as a hybrid between an industrial metal and a precious metal.
But right now you're saying that silver is also profiting from this safe haven demand?
Absolutely, absolutely, because we're in a sweet spot right now where there's still questions about the global growth outlook. Obviously, many investors are not confident about the outlook, but no one is looking for, the consensus view is not a double dip. So in this environment, I think investors are looking at silver as this nice hybrid between the industrial play and the precious metal play.
Tell me a little bit more about the risks to these price rises.
Well, I think the key risk, if you focus first on gold, really is what happens on government policy side. Gold is not going to rise forever. Right now, gold is, again, in a sweet spot like silver, because in the current environment, central banks are being forced to ease very aggressively, and there are a lot of concerns about sovereign risk as debts rise. And as long as we're in this environment, I do think gold is going to remain in strong demand. Obviously, if governments do get their act together, they're able to put forth plans that seem to credibly reduce debt on a medium to long-term basis, and central banks look as if they are going to, on a sustainable basis, move back from these aggressive easing policies, then at that point gold becomes vulnerable, and as does silver. But I don't think we're there yet.
Nicholas Brooks, Head of Research and Investment Strategy at ETF Securities. Really interesting to talk to you. Thanks very much for coming in.